Welcome back. So it's a really interesting time in the markets. And so I thought I'd take a few minutes this evening to show you the SPY and the Qs, all right? These index ETFs, they're coming into key timing points. And I want you to be ready for some of what might be ahead. So today is Monday, February 14th, 2022. Happy Valentine's Day. Now let's dive into the charts. Important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Okay, so now you can see my TradeStation screens, and you can see a bunch of tickers listed across the bottom here, and there's more to the right. So these are actually the markets that I cover in my Skinny Market Outlook Annual. So this is a set of reports that I do once a quarter. They provide long-term analysis, including forecasts, and they're on 20 of the top hot markets. So I'm gonna focus in tonight here with you on the SPY and the Qs, because they actually both have key timing coming in. So what does key timing mean? Key timing is the time element of a forecast. And a forecast is a meeting of time and price, meaning it's like a magnetic area on the chart that tends to pull price to it. So the cool thing about the way I teach forecasts is that I teach you how to profit with them when they work, which is great, but also how to make money with them even if they miss the target. So let's take a look at this chart of the S&P 500 Spider ETF, SPY, all right? And let's go ahead and look at it in a weekly time frame that you see here. So I'm just gonna bring your attention to some of the broader activities that are going on. If you'd like the specific forecasts I have, those are in the Outlook annual reports, and you can join my tribe if you're not in the tribe already. Reach out to my support team to find out more. So let's look at the momentum journey first, okay? The RSI power zone's down at the bottom. And notice how since the pandemic low, again, this is a weekly chart, we've been grinding higher, and over the past several months, actually been finally fading in momentum, okay? Now, that alone doesn't mean that we're on the verge of some big crash or, recession. There are other factors contributing to why the market's behaving the way it is. But when we look at the charts themselves, I wanna focus in on the weekly chart on a couple things. Number one, we broke below the December 3rd low on the SPY. And look at how we traded back in February so far, but weren't able to close above that low, okay? That ties back to a key GAN concept, and the patterns for that and how to actually be able to trade it are detailed in my GAN 101 trading pattern system. So even if all you do is take the hint from there that that's kind of a bearish situation, all right? Then we gotta look at what's gonna happen this week to see if there's follow through. Now, the analysis that I did on these 20 markets, I just hunkered down and did it on Saturday when the markets weren't moving because they've been going so crazy. In the analysis that I did, the really wild thing is that the index ETFs, not just the SPY and the Qs like I'm about to show you here, but also the DIA for the Dow, the IWM from the Russell, all of them have key timing points coming in around the same time. Again, those specific dates and how to calculate the forecast and the full analysis behind it are in the Outlook annual reports. What I will say is this, okay, that the entire range from the week ending January 28th is important, and now it's changed to a daily time frame to look at that more specifically. I would also keep now an eye on this entire range from January 24th, okay? The most important parts of the top of it, the middle of it, and the bottom of it. Now, if we can kind of reclaim, if bears can push down and reclaim more than half of this candlestick, then that would be a sign to me that we're likely to continue again into those key timing point forecasts. But if there's any further weakness and we're not able to nudge past the middle of the January 24th range, then I think there's more consolidation, more kind of choppy sideways trading ahead. And you can see really clearly that thing I was talking about of the old bottom being tested but not cleared, right? So let's take a look now at the Qs and see if they're behaving in a similar way or differently. Before I leave the SPY, let me mention though, the SPY has kind of shifted to moving between the bear zones most recently and is still now capping, forming peaks beneath the bear resistance power zone. So another sign to me that there's still room for downside, but we've got to watch price to confirm. Okay, let's take a look at the Qs and again, look at what's similar or different. Now on the Qs, the December 3rd lows were much higher up than what the SPYs have in comparison to recent price action. What happened on the Qs is actually a little bit more severe, and that on the weekly chart, you can see it broke below the October 8th low. That is not a great sign. So given that the Qs are part of given that the Qs and the NASDAQ are all related, and there's lots of tech stocks in the NASDAQ, this is not that surprising because tech stocks can be more volatile. So what does this mean for the days and potentially weeks ahead? Well, as I mentioned, I have a whole forecast with details in my Outlook Annual, but right now I want to bring your attention back to this May 14th, 2021 range. Yes, that entire range, the top, the bottom, and the middle would all be important support levels to watch if the Qs continue to weaken. So let's look at how that looks on the daily chart and take a look here. All right, so moving to the daily chart, we have the barrier of the January 24th range, just like we do in the SPY. And again, the middle of that range is very important. I get into why that's important, how to accurately calculate it, and more in the 4 Zones RSI coverage system, which is my beginner's momentum course. But looking at the action that we have here, and again, I'm looking at how it's similar to or different than the SPY. The Qs look weaker than the SPY, okay? In their overall technical analysis structure. Big picture, important to realize that we're in a weird time in the market and you gotta let the price confirm anything you're seeing, whether it's bullish or bearish. So remember to subscribe, like, and follow, and please comment. Let me know how you found this video. Let me know what else you'd like to learn more about, and I'll see you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.